Egypt's headline inflation sees surprise nosedive to 9.4% in June. African Development Bank sees factories benefiting most from trade pact. Plus, IATA says Zimbabwe owes airlines $196 million in trapped funds. Many thanks for joining us and welcome to Business Incorporated on Channels Television. I'm Chimeze Obi Iwawu. We'll get the show started now with the markets. And the South African JSE index took the shine amongst the African markets we track here. At intraday, the indices was up over 0.5%. In Nigeria, the all-share index was 0.85% in the red at intraday, while the EGX 30 was also down 0.39%. The Kenyan stock market closed almost 1% down on Tuesday. And in the Middle East, Dubai stocks outperformed their Gulf peers at intraday thanks to real estate shares. The Dubai index rose over 1%, with Emma Properties, its largest listed developer, adding 2.4%. The Abu Dhabi index was 0.09% up, also at intraday. In Qatar, the index increased 0.48%, while the Saudi index was 0.51% positive. European stocks traded lower in the morning as investors await a testimony from U.S. Federal Reserve Chairman Jerome Powell in the hope for hints on imminent interest rate cuts from the central bank. Meanwhile, Airbus deliveries have overtaken U.S. rival Boeing for the first time in 8 years, making the company #1 in the world after Boeing reports a 37% drop in deliveries for the first half of 2018. Orich Bats has the details of all of these and more from the European space. Hello, Orich. A beautiful afternoon to you.
Thank you, and to you the same.
So let's start with Greece. Now, Greece now has a new government. Prime Minister Mitsotakis was sworn in on Monday, and already he's on a coalition course with the European Union over fiscal policy. How is that impacting the market?
Well, that was a bit of a scare in the markets after the Athens stock market index rose since the beginning of the year by 40%, much more than the DAX or the Dow. It dropped on this week. It dropped yesterday by between 4% and 5%, and it's recovering today by 2%. But the possible row between the Prime Minister, the new Prime Minister Mitsotakis, in the EU over the budget did not come across all that well. Mitsotakis wants to lower taxes by drastic amounts and thus give the economy a boost and attract investment, overseas investment as well, he may well think. But the EU is adamant that it doesn't believe that this is financially sustainable, and that the country, that Greece, must abide by budget requirements that it enacted in connection with the bailout that helped Greece survive financially. The EU, the ECB, the IMF, they were behind this bailout plan, and Greece is no longer in the plan, but the commitments are still there. They will go for several years, and the EU wants to see Greece back on a solid track. And when you ask economists, a lot of them are also doubtful that lower taxes, lower revenues are going to be compensated very quickly by investment and business surges that might emerge from that. So there is a row here, Greece, possibly the second country after Italy to get into conflict with the EU Commission there in Brussels.
In the meantime, reports and speculation are increasing on who will replace Christine Lagarde as head of the IMF after she leaves to become president of the ECB. Is BOE chief Mark Carney in the running?
Yeah, Mark Carney is apparently in the running, according to German newspaper FAZ, the Frankfurter Allgemeine. It writes that Germany and France agreed on this some time ago, that Mark Carney would succeed Christine Lagarde at the head of the International Monetary Fund. Now, it seems that this agreement was reached assuming that Christine Lagarde would see out her term, which would have been 2021. But of course, she's now leaving earlier. She'll assume as her presidency role in the ECB. At the beginning of November, the finance ministers of the Eurozone have formally already nominated her, and it's not seen very likely that there will come anything that will reject that nomination. Mark Carney, the Bank of England governor, it's a bit of a problem, though, because he's Canadian. And the IMF post traditionally goes to a European, the World Bank presidency going to an American. Now, Mark Carney also has British and Irish passports, but already you hear a comment from the French government today, Finance Ministry spokesman, saying they'd like a European name, and other sources chiming in saying we need a continental European name. Another name, incidentally, from Britain that's in play, it said that George Osborne is interested in moving to Washington to take over at the IMF. He's the former he's the former Chancellor of the Exchequer, 2010 to 2016, under a conservative government there. He's a newspaper editor-in-chief now in London. But if Mark Carney is not going to be accepted because of British citizenship or Canadian citizenship, is it likely that George Osborne will be? I don't know. I'm sure that more names will come into the fray. There was talk also of Jens Weidmann, the Bundesbank president, perhaps being a candidate. That's unlikely, though, if Ursula von der Leyen becomes EU Commission chief, that a second German would assume a prominent post like that.
Of course, we'll continue to monitor that. Anyway, on corporate news, Boeing is no longer the #1 aircraft manufacturer in the world. The grounding of the 737 MAX impacting business. Tell us more. Also about what the share price is doing.
Yeah, it's a huge hit for Boeing, a huge drop, 37%. You already mentioned it just now. And there are 239 deliveries in the first half of the year. And contrast this to Airbus performance, which delivered 389 planes in the first half of the year, and that's plus 28%. Of course, the grounding of the 737 MAX being the main reason, and some airlines switching orders from the 737 MAX over to the Airbus competitor product. Whether it remains like this, we don't know. We don't know how long the 737 will be grounded, and if it comes back, how successful it will be. We know that British Airways parent, IAG, is talking about an order of 200 planes, 737 MAX, but that deal is not final yet. The impact on the exchange, well, less than you'd assume at Boeing. Slight loss the previous day, and now it's sort of holding its own, so no major dent. Holding its own in pre-Wall Street trading, I should add. And Airbus, though, going up nicely on that news, going up by 2%.
All right. Thank you for your time, Orich. Enjoy the rest of the day. And stocks in Asia mostly edged up today as investors awaited comments from U.S. Federal Reserve Chairman Jerome Powell for possible clues on the central bank's next move on interest rates. Mainland Chinese stocks slipped on the day, with the Shanghai Composite 0.44% lower to 2,915.30, and Shenzhen Composite 0.465% lower to 1,550.87. Meanwhile, the Hang Seng Index in Hong Kong added 0.32% as of its final hour of trading. South Korea's Kospi advanced 0.33% to close at 2,058.78. Over in Australia, the ASX 200 gained 0.36% to finish its trading day at 6,689.80 as most sectors advanced. In Japan, however, the Nikkei 225 slipped 0.15% to close at 21,533.48, and the Topix fell 0.23% to end its trading day in Tokyo at 1,571.32. And in the U.S., stock index futures were lower, falling for a fourth straight session as market participants eagerly anticipated comments from the world's most powerful central banker. At around 6 a.m. Eastern Time, Dow futures indicated a negative open of more than 70 points. Futures on the S&P and Nasdaq were both seen lower, Market focus is largely attuned to the testimony of Federal Reserve Chairman Jerome Powell, with investors anxious to learn whether he will confirm or confound expectations for U.S. policy easing this month. Over the next 2 days, Powell is expected to talk about slowing economic activity and increased risks, showing that the Fed is ready to cut interest rates as needed. On the data front, weekly jobless claims were expected at 7 a.m. Eastern Time. In corporate news, Angio Dynamics and MSC Industrial Direct are both set to report their latest quarterly earnings before the opening bell. AAR, Bed Bath & Beyond, and PriceSmart are scheduled to release their corporate results after market close. And away from the equities market, back here on the African continent, Egypt's annual urban consumer price inflation fell sharply to 9.4% in June from 14.1% in May, a significantly bigger drop than analysts had expected. Analysts said the deceleration was partly due to last year's high base effect and lower vegetable prices, which are often a key contributor to high inflation. The Central Bank of Egypt's Monetary Policy Committee will meet on Thursday. It held rates steady at its last 2 meetings in May and March after a surprise cut in February. Urban inflation fell month-on-month in June by 0.8% after rising by 1.1% in May. Egypt raised fuel prices last week by between 16% and 30% as part of an IMF-backed economic reform program that saw inflation rise to a high of 33% in 2017. While economists had predicted a softer deceleration in inflation in June, most continued to predict the bank would hold rates until the fuel price hike's impact is tested. And the International Air Transport Association says Zimbabwe owes airlines about $195 million that's stuck in the country due to a shortage of hard currency. Regional Vice President for IATA in Africa, Mohammed Ali Al-Bakiri, said the last payment received by the industry body was in January. The group held a meeting with Zimbabwe President Emmerson Mnangagwa and will now finalize the payment plan. The country is struggling with shortages of foreign exchange, including the US dollar, which is needed to transfer the proceeds of local ticket sales to airlines. And public sector workers in Zimbabwe have rejected a government offer of 180 million Zimbabwe dollars in added pay for the July to December period. It says it's adequate in the face of soaring inflation. Zimbabweans are angry as a year-on-year price jump of around 100% has eaten the value of their wages and savings, recalling the horrors of hyperinflation in 2008. Hopes that living standards will soon improve under President Emmerson Mnangagwa have not been realized. Daily power cuts lasting up to 17 hours and severe shortages of US dollars, fuel, bread, and medicines are bedeviling citizens who had hoped the end of Robert Mugabe's rule after a 2017 coup would herald a new economic dawn. Thomas Monzodo, deputy chairman of the Apex Council, a group of public sector unions, said the government's offer would see each of the 309,000 civil servants receiving only an additional 97 Zimbabwe dollars a month. That amount would buy less than 20 liters of petrol at a service station. The lowest paid government worker earns 430 Zimbabwe dollars a month, enough to buy a vehicle tire. And the African Development Bank has given a thumbs up to the recently signed Africa's Free Trade Pact, saying it will help shift the continent away from its over-reliance on volatile commodity exports and boost manufacturing. AFDB President Akinwumi Adesina said sectors where African products already have a competitive advantage have the most to gain from the deal that joins the markets of more than 50 countries, making it the largest free trade zone in the world. Commodity exports dominate even in Africa's 2 biggest economies, with mining production accounting for about half of South Africa's shipments, while crude oil generates 90% of Nigeria's foreign income. The AFDB will provide $4.8 million for member states to set up the trade zone's headquarters in Ghana and has asked its board for a general capital increase to invest in infrastructure and support the free trade area. When we come back after the break, we dissect the inequality report released by Oxfam. Do stay with us.